Hey, everybody. Welcome to this week's edition of GCNC Worldview. We're in the beginning stages of a podcast series that we're calling Cannabis by the Numbers. So if you missed the first episode, check it out. It's available out there in all the places that you get your podcasts and on YouTube as well. This week, we're going to take a look at TAM, total addressable market, opportunity or illusion, sort of dig into this concept that a lot of investment decisions have been made against. Sometimes people are using it to guide their business plans, and whether or not that's savvy or lazy, I think is one of the topics. And then how do we really focus into what should be driving our businesses on a daily basis as we build out projections. So with us are Beau Whitney in his economist sweater vest. Thank you so much for wearing the appropriate attire today. Beau, founder of Whitney Economics, Rachel Wright, CEO of Verdant Strategies, and Mike Goral, also partner with Verdant. Thanks, guys, for joining us today. It's great to have you here for this next round in Cannabis by the Numbers.
Thanks for having us, Chris.
Of course. I think before we really dive too deep, we always want to define our terms, right? So figuring out exactly what is it that we're talking about, because things get tossed around a lot. And Beau, I thought we might start with you just in defining for us, how do we address total addressable market? What is it?
So total addressable market is really the maximum size of the market. And so I always, for simplicity, I always say this is the potential of the market. And not all of the potential will be realized at first or ultimately. In cannabis, there's a split between the legal side and the unregulated side. And so really it's just what is the maximum amount of demand that's out there in the market.
And just for a sense of clarity, are we talking about the totality of all cannabis use across all uses and use types, or are we subsegmenting it into, say, consumable versus other types of use? How do you define it when people are putting, if somebody's putting a pitch deck together and they want to have a number at the front of that to show how awesome the opportunity is, what are they really saying when they put that up there?
Well, it depends. You can look at the totality of the market, or you could say how much of that total market does this sector represent? And then that becomes the TAM for that sector. And so it depends upon how you slice and dice it. But usually what I do is I look at the total market that's inclusive of all sales, regulated, unregulated. Then I break it down by the legal market, and then I break it down by sector and subsectors like flower or pre-rolls or edibles or oils or what have you.
Yeah, okay. And when we're talking about timelines, I think that's another important thing to look at with this, right? Which is, what is the total addressable market today versus 3 years versus 10 years from now, and whether or not that number is different or fixed.
Yeah, so what we do at Whitney Economics is we look at what the total market is now, and then we make assumptions on what would a growth scenario look like. A lot of ours, we try to keep our models super simple so that they're defendable, they're conservative, they're easy to explain. And so most of my projections on total addressable market in the cannabis space or in the hemp space are based upon population growth. It's how many new consumers can you bring into the space. There's a lot of data out there where they look at the percentage of consumers that have used or consumed cannabis in the past year, or the past month, and stuff like that. But a lot of those a lot of that data changes every year. And so it makes it really, really difficult to do modeling in the long term when things are changing every year. We take a slightly different approach, and we take the top line number and we put it and we fix it, or and then any additional growth would be associated with population growth. There's many different ways to calculate these things, but like I said, we try to do it as simple as possible.
Yeah, and I appreciate that a lot because I think sometimes the way it's done is people pick the number they want it to be to put at the front of their capital raise effort. And then they just sort of say it came from random data that they extrapolated out without a whole lot of rationale or reason behind it. And so as I've worked with investor groups around the world, I've certainly noticed that for a lot of the savvier investors, they sort of judge you really quick based on how obscene you've made the TAM number on the first page. So I often advise people don't even do that. Look at what your core business is, and then talk to what the size population is that you can actually hit with your company and focus.
Well, I might push back on that a little bit, and it'd be interesting to hear what Mike and Rachel have to say about this. But the way that I look at the total potential in the market is I look at that as the total opportunity. And then if you look at what your business can do, then you can judge how much of the total market you're actually capturing. And so in those pitch decks, and there's people that have said, I want to use your numbers because they're stable and they're reliable, and we don't want to use other people's because they are inflated. But when I look at total addressable market, and then I look at these pitch decks, I'll be like, okay, your numbers say that you're going to capture 10% of the market in 2 years. How are you going to do that? Is that even realistic? And so by judging the numbers in a pitch deck versus the total addressable market, then you can ask a lot of questions about and have those people that are making those pitches defend that data. And then you can learn a lot about the business.
Totally valid point. And I would love to hear, Rachel, from you and Mike, as you're talking to clients on their finances each year and their business projections and what they're looking at. How are you seeing sort of company behavior as it relates to how they're building out their projections? Are they using these types of numbers to sort of build out their 5-year growth plan, or are they basing it on sort of what they see immediately around them? I'm genuinely curious.
I guess I'll start, and and then Mike, you also want to pitch in here too. I'd say I wish more of my clients would actually talk to somebody like Beau, because I would love to start with the TAM, right? Because even before we're going for investor pitch decks, we're going for a business plan, and which geographical markets are we going to look at, right? And so I wish they would actually talk to Beau before they decide which, first of all, state they're going to be in. Some people don't really have much of a choice of state because that's how they qualify for their licenses, right? It's based on being in a particular state, and there's license requirements for that. But within that state, what is a great geographical area? And I really wish they would use Beau to first look at the TAM in that state to say, hey, am I going to waste a bunch of money in the state? And then look more to the localized region and say, am I going to go, I always use New York right now, such a hot spot and a great market. Are we going to look in the 5 boroughs? Are we going to look in New York City? Are we going to look in the more rural area? What is the market potential? So how do you know where to even start? And then subsequently go for an investor deck until you know what that market is.
One thing just to supplement that a little bit is, even though you have the total potential market, right? Not all of that will be captured in year 1, year 2, year 3, year 4, year 5. And so it's all about incentivizing consumers to participate into the marketplace, especially on the legal side. So there's actually a pretty stable conversion rate if regulators enable the market. And so then you can say, okay, in year one, maybe it's not 100, maybe it's 10. And so your business, how are you going to get 3 of that 10, for example? But then maybe by year 3, it's 25. And so you see the growth rates of that, of the legal capture. And then that's what you should start building your business strategies around and start building all of your operations and your capacity and all that. So there's the TAM, and then there's the growth of the legal portion of that TAM. And I think that's really important. So what I've done is I've looked at that legal growth rate for each state, and then I've looked at the sectors and subsectors, and then I've actually projected how many licenses you need. And so in doing that, then you have the TAM on your licenses. And then you could say, well, hey, there's already too many licenses. Is that a good opportunity? I'll talk to Rachel and Mike about whether or not the finances, work out and if the numbers work out. But, if you look at these things, and it doesn't take a whole lot of time, but it's worth it if you do this, because then it gives you a perspective, and that perspective is something that you can plan around your operations.
Yeah, and
And
Mike, there you go for it. I wanted you
yeah,
to
I
chime
was
in.
just going to add, all the things that Rachel and Beau have just talked about. I would add another layer there and look at demographics. There's a lot of press out there right now about Gen Z and Gen X that are not, consuming alcohol, and they're turning to cannabis products and hemp products um, in lieu of alcohol. And so that there should be like some sort of a bump there. And depending on where you're looking to locate your dispensary, then demographics will play a part in it. The other thing that's not really looked at too much is the older population. Those people that are in 50 and above that are now starting to get into cannabis as pain relief, stress relief, being able to sleep better. That you know tinge of it being like this forbidden drug is starting to go away, and I think that will change the total TAM as well.
Yeah, and I think on that topic in particular, I was talking to a Midwest THC beverage company this week who have actually structured at least 70% of their business orientation toward that 65 and up group. And they've got a whole interesting, very targeted marketing program to bring new people into that market through beverage, which is a significantly less intimidating approach than trying to get people who, have concerns with inhalation and other methodologies. So I agree with you. And I love the direction we're going with this conversation, which is saying, TAM is not really the totality of the universe. It is defined by these subsectors that you're operating in and taking it down really quickly. I think that's where, Rachel and Mike, your work with clients and helping them with projections is particularly valuable in making sure that they have sustainable operations, because they're not working against, hey, look, it's $1 trillion industry and I'm going to get, just give me 3% of that in 3 years. Like, I have seen those types of numbers and they're just ludicrous, right? So really using that education method. When you guys are looking at sort of growth sectors, I'm going to pivot it a little bit. Which areas do you see us sort of acquiring new populations the most right now? Is it beverage? Is it edibles? And I guess that probably varies by state and country, but are there specific trends that you're seeing that are having quicker population growth, or the businesses themselves seem to be projecting higher than you would have expected?
I'll jump in a little bit on that. And one thing that I definitely appreciate about Mike's comments about demographics is, what you're talking about is the consumer archetype. There's different consumers and rationale and motivations on why people consume. And so there is a large segment that aren't going to be part of the dispensary model, for example, in the United States, but they use cannabis for wellness purposes. And so there's this huge swath, especially internationally, that is consuming cannabis for wellness purposes. And it's not to get high. It's not, necessarily medicinal. There's a lot more to it. And so I think that's a growth market internationally. We were just in France, and I was talking about the medical market and the evolution of that. But then I also talked about the wellness market. I was speaking in Iceland as well. The wellness market using cannabis represents about half of all of the spends in Iceland for tourism. And so this is one of these statistics that people just don't realize. So understanding the rationale behind your demographics and behind the motivations on consumption and what they want to experience out of cannabis is really, really, really important to flesh out on a state by state and country by country basis.
Yep, absolutely. I can appreciate that a lot. And as we're trying to look forward at capital investment in particular, I'm going to bring it back to this a bit because it's what tends to drive the excitement or lack thereof at any given time for emerging markets. How does this help sort of champion more pragmatic thinking, smarter thinking? Because the initial green rush, and I hate that term, but that's what was used early on, right, was all about hype. It was about making the biggest numbers possible, not the smartest numbers possible. So, I guess Mike and Rachel in particular, when you're helping these individual companies build out sort of their next phases, how are you really encouraging them or working with them to say, these are the numbers, you don't have to overhype this, you just have to make sure it's intelligent? Or are we still in a phase where if there's not at least some hype, it's not happening?
Well, capital, and I know there's a big discussion about capital and whether capital is flowing in or not flowing in. And to be honest, a lot of the capital that I see flowing in is from current operators. They are deciding whether to take their capital and expand to new markets, right? And so they are themselves investing. And so the question is not whether we can get outside investors per se, it is, should we invest in a new geographical market, a new product type that we haven't thought of, a new model, go-to-market model that we haven't thought of? Either that or they're getting their friends, or they know, their rich uncle, or their rich neighbor, or their rich friend they grew up with, who is interested in the market, kind of curious in a different way, and investing, not just in per se using or trying cannabis. So it's kind of interesting. I feel like investment and capital has gotten a bit of a bad rap as if it's very stagnant, but to be honest, I haven't seen that. We're looking outside the normal boundaries. So I completely went on a different tangent. So Chris, what was your question again?
No, that actually was not. And I agree with you for what it's worth on that. When I hear at conferences, oh, capital's dried up or it's not there, that just isn't true. What is true is that it's smarter money now. And it is more thoughtful money, and they don't have to stand on stages and talk about it, because that's not what matters to them anymore. What matters to them is, do I have a profitable business, and am I investing in that? And I've seen that across the United States. I've seen that throughout Europe, South America even. There's been some smart investments, and these are markets that just got punished by unwise investment early on. And I think people learned and have slowly learned how to recover from that. And now we're seeing a lot smarter moves, oftentimes more focused moves, but definitely smarter moves.
I think the concept of smart money is a good point to make. Early on in this movement, there was a lot of aspirations. People saw the potential of the market. I think maybe they even undercalled it a little bit, but they saw it and they threw money at 10 different companies and hoped one paid off. And so there was a lot of just throwing money at the wall and see what stuck. But now, and that was high risk, but it was also high reward potentially. Now, because the rewards and returns haven't been there per se for everybody, then it's more strategic in nature. And so people want to look at business fundamentals. They want to look at operational efficiencies. They want to look at the management team. They want to look at all these things that will give them confidence to know that these people will run a legitimate and successful business. And so that's the smart money aspect. They're looking at more business fundamentals rather than just aspirations of a market.
Yep. Yep. I couldn't agree more. And I love the direction that it is now, because it gives me some hope that words like TAM that get thrown around can now be useful, and not just something that is floated at the front of something in a hope of basically grifting, which is what I feel like some of the early investment quote unquote opportunities were. It's much smarter now. So
I think where Rachel and Mike can come in, and me as well, is we can look at an opportunity and we can say, hey, even though that on paper is being professed to be a $10 million opportunity, based upon our understanding and based upon the fundamentals, that's really an $8 million opportunity. And in doing so, we're de-risking that not only for the investors that come in, we're taking 2 million off the opportunity, but we're also actually benefiting the operators that are soliciting those monies, because a $10 million loan versus an $8 million loan can have, a heavy burden in terms of payback and all that. And that could really make an impact on your operation. So by having disciplined inputs, from Rachel, from Mike, from myself, and really looking at the risks and assessing it and truing it up, then it's benefiting the investor, it's benefiting the operator, and it's benefiting the industry.
Absolutely.
And I would add that the opposite is also true too, because, you know, we're talking about the company that is looking for maybe 10 million. Well, there's a lot of companies out there that think that, hey, all I need is a million or two and I can make a go of this. And you might not be able to make it off of a million or 2 million. Maybe you need 4 million or 5 million, and they need to make sure that, hey, this is going to be viable if I go out and borrow, $5 million to run this business.
Yeah, absolutely. And Rachel, before we wrap it up, any closing comments running off of those? We're running up against time for today.
Yeah, I just say it's an ecosystem. It's an ecosystem of having the right advisors. I've seen in this industry quite often that there's not enough respect for bringing the right professional team together, but it can make such a huge difference on the back end. So carefully consider, I always say penny wise, pound foolish. Oftentimes I find out from our clients, after they've made the decision, and I really wish they would have brought us in, and so I can encompass them with the right team to make the right decisions on the outset. It can save millions down the road.
Yeah, I agree. I've lived that experience myself several times in my own companies, where you look back and you go, if I'd done that earlier and asked that question 2 years ago, we probably could have been in a lot better spot. So it's always good to look at the numbers, look at the advisors and who's contributing. And thank you, team, for this episode of Cannabis by the Numbers. This is great. This was episode 2 for those of you listening. We've got another one coming up next week where we're going to, again, deep dive into topics specifically around the numbers behind the cannabis industry. So thanks, everybody. As always, if you haven't subscribed, do that. And we'll catch you next time on the GCNC Worldview.
Thanks so much.
Thank you.